Hi there. The April 2026 IR35 changes have shifted responsibility for thousands of contractors.
Imagine opening your mail to find a £45,000 backdated tax bill from HMRC, entirely triggered because you used a client's standard email signature. Welcome to My Tax Accountant. Today, we are navigating the UK's off-payroll working rules for 2026, where a minor administrative oversight can compromise your entire business. Take Sarah, an IT project manager. She had an ironclad contract drawn up by lawyers and assumed she was completely insulated from an HMRC investigation. But the enforcement landscape is shifting. In 2026, assuming your paperwork alone protects you is the single greatest threat to a contractor's livelihood. The government has officially raised the ceiling for what qualifies as a small business. Under the 2026 update, any company with a turnover under £15 million now fits the definition. If your client falls under that new threshold, they are no longer legally required to assess your IR35 status. The responsibility for issuing a status determination statement shifts abruptly back to you, the contractor, and your personal service company. This is a direct transfer of raw financial risk. If a status assessment is incorrect, HMRC will pursue you for the unpaid PAY and national insurance rather than your client. You can no longer hide behind the compliance departments of the companies hiring you. Operating safely in this environment requires rigorous, proactive self-regulation. To understand why this matters, look at this chart comparing take-home pay. Operating outside IR35 allows you to function as a genuine business, extracting profit via dividends and deducting a modest sliver for corporation tax. But if you are dragged inside IR35, your day rate is legally treated as a deemed salary. Massive PAY and employer national insurance contributions are carved out of your gross income. For independent professionals, losing that outside status obliterates planned profit margins and removes the financial advantages of contracting. When HMRC successfully challenges your status, they retroactively rewrite years of your tax history, taxing you as a disguised employee for the entire duration of the contract. This is exactly what caught Sarah. HMRC didn't read her contract first. Their AI-driven Connect system flagged her profile by cross-referencing behavioral data, spotting discrepancies in her tax filings that mirrored a permanent employee. Many contractors think running their details through HMRC's Check Employment Status for Tax tool, or CEST, grants them immunity. HMRC actually routinely ignores a favorable CEST result if your real-world working practices don't match the inputs you provided. The tool itself has deep flaws. 1 in 5 assessments returns an unable to determine result. Worse, it completely ignores mutuality of obligation, which is a foundational legal test courts use to decide employment status. Feeding basic answers into a rigid online form offers zero protection against an algorithm programmed to hunt for the daily realities of how you work. To build a robust 2026 compliance strategy, start by securing written confirmation of your client's exact financial size before commencing work. You must establish exactly who holds the legal liability. Next is the control test. Sarah was flagged because she participated in the client's internal staff appraisals and let managers dictate how she completed her tasks. You must control the method and delivery of your own work. Then comes the right of substitution. Proving your limited company can send someone else to do the job if you are unavailable is the strongest defense against an IR35 inquiry. But there is a catch. A contract stating you can provide a substitute subject to client approval provides very little cover. The client cannot hold a blanket veto. The right must be genuine, unfettered, and based purely on the substitute's qualifications. Finally, if you operate through an umbrella company, you must audit your supply chain. Under the 2026 Joint and Several Liability Rules, if your umbrella firm fails to pay the correct tax, HMRC can pursue anyone in the chain to recover the debt. A meticulously drafted contract cannot save you if your physical routine, fixed hours, line management, and heavy integration into the client's team looks exactly like an employee's schedule. Fortunately, Sarah engaged specialist accountants. They proved she had a pre-vetted substitute ready to step in when she fell ill, demonstrating a genuine business-to-business service. HMRC dropped the £45,000 demand. This graphic illustrates the 2026 PAYE set-off mechanism, your safety net if an audit does go against you. If you are reclassified inside IR35, HMRC now subtracts the corporation and dividend taxes you already paid from the final penalty. This reform finally ends the practice of double taxation, significantly reducing the financial blow of a lost tribunal. While the math is fairer, it does not refund your money. Impeccable record-keeping and expert defense remain your only reliable shields against an investigation. Always monitor your client's size, reject day-to-day control, maintain a valid substitution clause, and thoroughly vet your umbrella providers. Please note, the information in this video is for educational purposes and does not constitute formal tax or legal advice. Stop guessing your employment status. To secure absolute certainty on your contracts and working practices, reach out to My Tax Accountant today. Hit subscribe for more essential strategies to outsmart the tax algorithms targeting your income.